What if I told you that the wrong personal loan could quietly cost you thousands of dollars in extra interest, hidden fees, and years of financial stress? Right now, millions of Americans are turning to personal loan for one reason. Life got more expensive, credit card is rising, medical bills are crushing families, hope repairs can't wait, and high interest rates are making borrowing decision more important than ever. But here's the problem. Most people choose personal loans the wrong way. They focus only on the monthly payment while completing ignoring things like hidden fees, repayment terms, funding speed, credit score requirements, and long-term financial impact. And in 2026, lenders are competing harder than ever for borrowers. Some companies are offering same day funding, others are targeting people with bad credit. Some provide no fee loans, and a few lenders are even offering financial advisor and exclusive member benefits. So, in this video, we are breaking down the best personal loans of 2026 based in different financial situations. Whether you need to consolidate debt, improve your credit score, finance home renovation, borrow with bad credit, or simply get fast cash responsibly. This guide will help you understand which lenders may fit your need best, and most importantly, we will explain the hidden details most borrowers completely miss before signing a loan agreement. Let's get started. Personal loans have become one of the fastest growing forms of borrowing in America. Why? Because they are flexible. Unlike mortgage or auto loans that must be used for a specific purchase, personal loan can often be used for almost anything. That includes paying off high interest credit card debt, covering emergency medical expense, financing home improvement projects, handling unexpected financial emergencies, funding weddings or major life events, consolidating multiple debts into one monthly payment, and during periods of high inflation and rising life costs, many Americans are searching for ways to regain financial control. But personal loan can either help you finance or damage them. A lower interest rate can save thousands over time, but borrowing from the wrong lenders with high fees and poor terms can trap borrowers in expensive debt cycle. That's why choosing the right lender matters. And now let's break down the best personal loan option available in 2026. First on the list is Discover. In your goal is paying off high interest credit card debt, Discover stand out as one of the strongest debt consolidation option available. Here's why this matter. Many Americans carry credit card balance with interest rate about 20%. That means large portion of monthly payment go toward interest instead of reducing the actual debt. Debt consolidation allows borrowers in combine multiple balances into one personal loan with potentially lower rate and structured payment plan. Discover helps simplify that process by directly paying off multiple creditors on your behalf. That removes extra step for borrowers and help reduce mistakes during the consultation process. Another major advantages Discover charges no fees. That means no organization fees, no application fees, no prepayment penalties. The lender also offers competitive interest rates and relatively fast funding. However, there is one downside. The shortest repayment term available is 3 years. For borrowers wanting very short terms repayment scheduled that may feeling limiting. Still, for Americans trying to simplify debt and potentially reduce interest cost, Discover remains one of the top personal loan option in 2026. Next is LightStream. the online lending division of Trust Bank. LightStream is designed for borrowers with a strong credit profile, especially those financing major home improvement projects. And this lender offers something many competitors don't. Very large loan amount. Borrowers can access between $5,000 and $1 lakh. That makes a LightStream attractive for projects ranging from simple kitchen upgrades to full-scale renovation. Another major strength is fee transparency. LightStream charges no organization fees, no application fees, no prepayment penalties. And in some cases, borrowers may even qualify for same-day funding. But there's an important catch. LightStream does not offer pre-qualification. That means borrowers typically need to formally apply before seeing potentially rates. The lender also generally requires good to excellent credit for approval and competitive rates. Still, for financially stable borrowers wanting low fee financing for large projects, LightStream is one of the strongest choices available. Number 3. Best for bad credits. NetCredit. Now let's talk about one of the biggest challenges in borrowing bad credit. Many traditional lenders reject borrowers based almost initially on credit score. But NetCredit takes a different approach. Instead of looking only at credit history, NetCredit also evaluates additional financial factors during the application process that can help borrowers who may have struggled financially in the past but are now rebuilding stability. Another important feature is that NetCredit reports payment activity to major credit bureaus. That means responsible repayment may help borrowers gradually improve their credit profile over time. The company also offers financial education tools, budgeting resources, credit score guidance, saving educations, and borrowers can pre-qualify before formally applying. However, there are trade-offs. Net credit interest rates can be significantly higher than traditional lenders. Late fees may also apply repayment are missed. That means borrowers should carefully evaluate affordability before accepting any loan offer. For Americans with damaged credit and limited borrowing options, NetCredit may provide access to financing when traditional lenders will not. Number 4. Best for building credit. Upstart. One of the most unique lenders in 2026 is Upstart. Unlike traditional lenders that focus heavily on credit score alone, Upstart says it evaluates non traditional factors such as education, employment history, income potential, career background. That approach can help younger borrowers, recent graduates, or people with limited credit historical access financing. Upstart also offers a wide range of loan amounts, pre-qualifying options, potentially next day funding, no prepayment penalties for borrowers trying to improve their financial reputation responsibly. This flexibility may be valuable, but there are limitations. Repayment terms are generally limited to either 3 or 5 years, and missed payments may trigger late fees. Still, Upstart has become one of the most talked about lenders for borrowers trying to rebuild or establish credit in modern lending markets. Number 5. Best credit union option. Alliant Credit Union. Credit unions often operate differently from traditional banks because they are member owned institutions. They sometimes offer more competitive rates and borrowers friendly terms. One standout option in 2026 is Alliant Credit Union. To apply for a loan, borrower must first become a member and maintain membership for at least 90 days. That may sound inconvenient at first, but may borrower feel the benefits outweigh the extra step. Aligned offer competitive interest rate, large loan range, flexible repayment terms, debt protection plan in certain circumstances, and potentially someday funding. Credit unions are often known for more personalized customer service compared to massive national banks, and for borrowers seeing long-term financial relationships rather than one-time transaction, that differences can matter. Still, membership requirements may discourage borrowers wanting immediate funding. Number 6. Best for extra benefits. SoFi. Now let's move to one of the most modern financial brands in America. SoFi. What makes SoFi different isn't just the loan itself. It's the ecosystem built around members. Borrowers may gain access to financial advisor, career networking event, referral bonuses, online community support, exclusive member experience. In other words, SoFi potential itself as more than just a lender. The company also offer large loan amount, competitive interest rates, no prepayment fees, no late fees, and borrowers can pre-qualify before applying. However, there one important details. The best rates typically require strong credit profiles. Borrowers with weaker financial histories may receive higher rates of struggle to qualify. Still, for financial responsible borrower wanting modern digital banking experience and member perks, SoFi remains one of the strongest personal finance brands in 2026. Number 7. Best for a person support. Wells Fargo. While many lenders are moving fully online, some borrowers still prefer face-to-face assistance. That's where Wells Fargo stand out. With physically branches across 36 states and Washington DC, borrowers can receive in-person guidance during both the applications and repayment process. For some Americans, especially older borrower or people uncomfortable with online only banking, that personal interaction provides extra confidence. Wells Fargo offers competitive interest rates, large loan amount, flexible repayment terms, no organization fees, no prepayment penalties. However, there are restrictions. Borrowers generally must already be existing Wells Fargo customers, and missed payments may result in late fees. Still, for borrowers wanting traditional banking support combined with modern lending products, Wells Fargo remain a major player. Number 8. Best for secured personal loan. Upgrade. Finally, let's discuss Upgrade. Upgrade offers both unsecured and secured personal loan, and secured loans work differently. If approved for a secured loan, borrowers may need to use their vehicle or collateral. Why does that matter? Because collateral reduces lenders' risk, which can sometimes help borrowers qualify for better rates. For borrowers with limited option or weaker credit histories, secured loan may credit borrowing opportunity to that otherwise wouldn't exist. Upgrade also offers flexible repayment terms, fast funding potential, pre-qualification options, and importantly, the company caps rates at 35.99%. While that's still high, it may remain lower than some extreme subprime lenders' alternatives, but borrower must understand the major risk. Failure to repay could potentially result in losing the vehicle used as collateral. Upgrade also charges organization fees and possible late fees. This means borrower should carefully evaluate risk before accepting secured financing. Before taking any personal loan, ask yourself several critical questions. First, why do you actually need to money? A loan used to eliminate high interest debt may improve your finance, but borrowing for unnecessary spending can create long-term financial pressure. Second, can you realistically afford the monthly payment? Never focus only on approval. Focus on repayment. Third, compare lenders carefully. Pay attention to interest rate, organization fees, repayment terms, funding speed, credit score requirement, repayment penalties, and finally, Always read the fine print because the most expensive part of a loan is often hidden in the details borrowers ignore. Personal loan can be powerful financial tools when used responsibly. They can help consolidate, fund emergencies, improve homes, and even rebuild damaged credit. But the wrong loan can quickly become a financial burden. That's why understanding lenders' fees, repayment terms, and risk matter more than ever in 2026. The best loan isn't necessarily the biggest one. It's the one that helps improve your financial situation without creating unnecessary stress later. So before signing anything, take your time, compare option carefully and borrow strategically. If you found this video helpful, make sure to subscribe to more smart personal finance and investing content designed to help Americans make better money decisions. And comment below. If you needed a personal loan today, which lenders would you trust the most? Thank you for watching and I'll see you in the next video.